Welcome to the program. Today we're going to talk about what's happening on the markets and the RBA's minutes. We'll discuss what's going on with the election. We'll talk about Westpac's hybrid note issue, and we'll give you some more information on what you need to know in regards to super. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. We've only got a few minutes today. We're going to go through 4 topics. We've got a timekeeper who's going to ring the bell when he tells us to move on. Paul, first question, markets 4 up weeks in a row, heading into our 5th up week. Your take on what's going on at the moment?
Yeah, I'm surprised we actually could have another up week this week, maybe after the US lead last night, not so sure. But look, the minutes yesterday from the RBA I think were really the important part, Marty. I was surprised when they did cut 2 weeks ago. I got that wrong. I think yesterday's sort of minutes basically say, look, they're not in a super hurry again. And the market.
There was some concern in the minutes from some of the RBA board members about cutting.
Yeah, the phrase was sort of about, well, it was a close run thing by the sounds, but do they wait a bit more for the data to come out before they cut? So I think you read from that is that you're not going to see another cut the next couple of months. Maybe August at the outright earliest, but I think that they're going to be a bit slower. And
do you think a cut is on the cards still for this year, though, another cut?
I think it's possible, but not. I'd just hose it back a little bit, and particularly if you look at what's going on in the US now, where they seem to be giving more probability towards potentially a June increase. Yeah, you've got to imagine that us cutting, the US going up, we're out of sync a little bit, as is most of the world with the US, and so you question how long that can go on for. I think what the big take you can take out of all this is interest rates are going to stay relatively low. And, you know, that's why
the interest rate cut has been good for the currency.
Yeah, it has been good for the currency. That's why you've seen the market come back. I think people are just getting squeezed. I mean, you know.
We'll move on the election. Obviously, a fair bit of stuff happening at the moment. Paul, do you think there's any chance that Malcolm Turnbull won't be Prime Minister?
I think the chance is still pretty small. The bookies have still got it at about 3 to 1, or just paying over $3 on Bill Shorten and $1.30 roughly on Malcolm Turnbull.
And they've got a lot of self-interest in making those predictions accurate.
Well, they do. They call their bottom line.
That's it.
I mean, look, I think you've got to be a little bit careful with the media. The election has just gone to sleep, and it was always going to happen. 8 weeks, how do you sustain it?
It's a long campaign, isn't it?
The next 2 or 3 weeks, no one cares, right? Yeah. And of course, the media, the Australian, they've got journalists out in the field. They've got to find something to report. I really don't think
they've got less journalists out in the field now.
They have got less journalists out in the field, but they've got to write something. We all know that's the business they're in. I just think you just sort of put this thing to sleep for 3 or 4 weeks, and it'll only be the last couple of weeks that much comes back into this campaign. Could they get in? Yeah, if he did get in, would that be bad for markets? It would. So there's a risk there, but I don't think yet the market's factoring that. It's a bit like the Donald Trump effect. Does anyone seriously think Trump's going to get elected? Not yet. If they do, watch out.
That's it. Westpac have issued some hybrid notes recently. That was announced yesterday. Is this something you think investors should be looking at for parts of their portfolio?
Yeah, look, I mean, the last CBA issue went really well, and this is
just explain what a hybrid note is.
Yeah, a hybrid, of course, it's a bit like a bond, a bit like an equity investment.
Hence the name.
Hence the note. Hence a hybrid. I mean, essentially, it pays a rate of interest over the 90-day bank bill. In this case, the margin is going to be about 5%, so between 4.9 and 5.1.
So that'll be the total yield you receive.
Effectively, you get plus the 90-day bank bill rate, which is now under 2%.
So it's about a 7% yield.
About 7% on a grossed up basis, and you'll get that every quarter, and that rate changes because the bank bill rate moves around all the time. If interest rates go up, the hybrid will pay more interest. If interest rates go down, it'll pay less. So it floats over it. It's got some risk though. It is a form of capital for Westpac. So of course,
and the higher return compared to say term deposits is that what you'll be paid for taking more risk?
Yeah, you get paid for taking more risk. Now the question is, these spreads have all moved up. This is now back in the sort of attractive area. As long as Westpac manages and doesn't give everyone everything they need, leaves a little bit, restricts supply a little bit, this should be okay. So, look, hybrids have also got a little more attractive and the last few months because they do relate back to the ordinary share. When the ordinary share dividends yields are high, hybrids fall in price and vice versa. So now that the bank shares have risen a little bit, the hybrids are starting to look a little more attractive again.
Final topic, superannuation. Anything else we should be aware of at the moment? It's been talked about a lot on this program and on all the other Switzer channels. Your thoughts on what we should be taking
I don't think you should do anything just yet. I mean, I notice there's more stuff today out. Costello's saying the 1.6 is not enough. I think after the election you're going to see a bit of I won't say backtracking, but I think they're going to have to think really carefully about some of those transitional provisions. And I think that for people over the situation of 1.6...
So changes could be possible.
I think changes are more than likely. It just takes a couple of National Party senators. You know, you've already know where Labor comes down to the position. They're going to oppose some things. Yeah. Let's assume that Turnbull gets back in.
Will there be the caps could be changed?
I think there's quite a few possibilities. I mean, if you just look at just take the quick dynamics of the Senate post the election, you'll have the Greens will line up that with the government to support the changes, but you know, if assuming the crossbench goes for the Labor Party, which is probably likely, it'll only take a couple of National Party senators or Liberal senators who are feeling the heat, who don't think these things should be impacting the constituency. The government will have trouble getting the legislation through. So
it's a long way to go yet.
A long way to go. I wouldn't do anything. I think the thing to do for this year is still to maximise what you can under the cap. So that's the 35,000 and the 30,000. If you're under 50 and your concessional cap, do as much as you can there this financial year. And also, as we keep saying to people, every financial plan will tell you this, if you've got a spouse, do what you can to even up your balance with your spouse. It doesn't matter whether it's Liberal or Labor. It's clearly superannuation in some way is going to be limited.
Is business as usual under the current regime.
Business as usual. The only thing, you know, that I think that's the only, under the concessional caps, try to maximise those ahead of 30th of June. Think about spouse splitting. That's the other strategy for post 30th of June.
Just putting some money into your spouse's name.
Well, yeah, you know, you can legitimately change your spouse, your concessional contribution into your spouse's name. You do that through your super fund. You fill in a form. You make the election after the financial year. But this is one of the strategies to try to even up your balance.
That's all we've got time for. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. Shh.